The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Chapman Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days. And I follow two great technicians. You got John Logan, you got Steve Rhodes, and of course today being Thursday, you got Larry Pesavento coming right after me. And we've got scheduling shows right through. We've got Daryl Martin, you got, who have you got? You got Dave White, and you've got Tom O'Brien, 2 hours of Tom, and then you've got Andy Hecht. Wow, what a lineup. So let's get to the story. I think this is probably one of the most important sessions that we've had all year. All right. We've only had 4 or 5 sessions. But it is, and I'll explain why. It's much better if you're looking at the charts right now. If you're looking at Tiger TV, you will see a whole bunch of things going on. You'll notice that in this right-hand corner, I've got the 120-minute chart. I'm going to make it bigger. This is the E-mini. You know what I'll do? Let's just get it out the way. The Dow is up 302 at 17,887. It's just wiped out those 2 terrible days that we had that really broke down from, what is today? Thursday, so it's Wednesday, Tuesday, from Monday. But we haven't closed. But something's going on here that I'll explain in a moment. The S&P is at the S&P is up 35.55. That's at 2060. The comp index is up 86 at 47.38. The VIX is down to 17. I'll say that again. The volatility index is down 2.23, down 11%. That is really important. Why? Because I'll do this at the same time. VIX.X. Because you'll see there was a peak F in the 120-minute chart, and I'd shown subscribers one of the reasons why we switched so quickly from the short side to the long side is I've been talking for quite some time about consolidations getting quicker and shorter and steep. And then we break out and possibly go to new highs. And that acceleration is going to be very important in my work because it suggests that we break out and we do go, oh man, I don't even want to talk about it because you got those trading gods, lowercase t, lowercase g, sitting out there just waiting to smack you on the nose. But it doesn't matter. I'll talk about it because that's the way technical analysis works. Remember yesterday when I had a call from Dan from North Reading, and we were talking about the market, and I said, the only way we can get out of this is to make a V-shaped pattern. Got to break through the 9-period moving average. I'd drawn in the arch formation. I said, no, you got to go right through it, and that'll be very positive because everything about my weekly chart still, at that particular time, I said, still favor higher highs to come. They don't have to be much higher, but higher highs to come. So I wanted to show you this chart, and it's so important, and I berated myself for ignoring it, and it gave a fantastic pullback, which I basically, we had short position, which worked out okay, and the put option, one part of it, just through bad luck, lost a little bit, but the remaining few options made 70%, over 70%. But the real issue was that you had, let me open this up here. This is just beautiful. I discussed this yesterday on the right. This is the SPY and the SH. The SPY is 100% long the S&P, and the SH is 100% short. And what I said is that in my work, there was a 120-minute chart that said we should make this oval. Now I'm going to draw this out, and I'm going to show you what my subscribers see every single day. I've done this for so long. Oh, I don't even go back that far. Should I change it just for now? No, there's an oval pattern right there between the 120-minute Dow chart and the 120-minute VIX index. Went to peak E and then pulled back from 25.20 down to 14. Then it rallies back up to 22.90 to a peak F in the Chapman wave, and now it's plummeting. It's down at 17.20. That's allowed this circle to take place for me to identify between yesterday and today that there would be a really sharp turnaround, for us to cover the remaining short that we had for a small profit, but a profit nevertheless. Should actually have switched. I would have switched immediately to go long, but there were other things that we were doing that I thought were more important. We went along something that we wanted to go along quite some time, and we do have other long positions. So now what I'm looking at is that this gave me so much information. And we got the all those different Chapman wave, trend gauge, technical tools that worked as well. Now, this is going to fail if at any point today or tomorrow we don't continue higher, but instead we just break down and we go under 17,720 on the Dow. That was, oh man, this is just a fake out. I don't think it's a fake out. I think this is the real thing. Why? Because when I'm looking at the volatility index, look how it spiked and failed, spiked and failed, spiked. The week's not even close to being finished because we've still got the whole of today. We've got the whole of tomorrow to go. And as I'm looking at it right now, I don't see a sign yet to say that the VIX index wants to climb back into the 20s or even the 19s at this particular point. It feels very strongly with the MACD and stochastic failing that it wants to probably go down to the 16s. Hey, could be wrong. That's the way I'm looking at it. Now, the weekly chart has had this acceleration between a quick spike in October, the week of the 14th of October, the week of the 17th of October. It was the 15th of October low in the market. At 31.06, the VIX pulls back dramatically, goes down to that low of 11.53. Then it spikes up very quickly. In 2 weeks, it goes back up to 25.20, pulls back, and it makes a higher low, and now it's making a lower high. So you're getting a series of lower highs and a series of higher lows, and it's making an apex. And it says, if at any point the VIX index pulls back into the 15 to 14 area, there's probably going to be a failure pattern in the market will continue higher. I've got a whole plan set out in my mind that says there's a good, and this is what I spoke about when I gave a talk recently, and I said that I'm anticipating that we get in January, we go to slightly higher highs based on, now let's go back to the story. I'm going to go through everything as detailed as possible, then I'll get to callers. And if my engineer could just ask if Mark can hold on a moment, and I'll get to him in a moment. If he can't, I'll get to him right now. So what we've got is that the weekly chart, look at this candle that's forming in the weekly chart of the Dow. You tell me now, based on any technical indicators that you're looking at, whether this particular candle here at this moment exactly now, is it negative or is it positive? Has it held the uptrend line? Is the MACD still very strong? Is the stochastic still at 89%? I would have to say, day's young, the week is young. But at this particular point, the monthly chart has held the 9-period moving average twice on these pullbacks. The 120-minute chart is in leg B, huge move up. Is it B or C? ABC in leg C, huge move up. And the weekly chart at this particular point is saying, hey, I'm holding above 17,118, and that's really the area that's going to be critical. If I fail by tomorrow at 4 o'clock, you can call me a failure pattern. But at this particular point, it looks very much like it wants to go to leg D in the weekly chart of the Dow, which is only, and this is crazy, I don't know how I'm going to be able to resolve this. It's only a leg B, a peak B. No, it's a leg B because we haven't even made a peak confirmation. Look, the S&P went to 2092.70 and then 2093, I believe it was. Yeah, 23.55 last week. Just a week ago. It made a new all-time high. And now it's pulled back and it's gone from the all-time high of 2093 down to a low in the up channel, right into the so-called buy zone at 1992.44. That is a huge move. And now it's had a big spring back. I like what I'm seeing. The QQQ is not acting well at all. The QQQ is up $1.84 at 103.21. It needs to close nicely over this 9-period exponential moving average right where it's at this particular point, but that's on a weekly basis. So we'll see what happens. Why are the charts moving? Oh, because I've expanded them so much. Okay, now let's run the numbers. We've got, you've got the comp index is up 80. You got the IYT. The IYT is not acting well at all. It's up 255 at 160, but it's making the H pattern. It has not succeeded. So we're going to have a divergence, and I believe that this divergence is going to tell us, just as the VIX is going to tell us, that we can rally a little bit longer into January. But January, boy, you got to be real careful, because if we have another tumble to the downside based on maybe the IBB failing, the IBB right now is trading up $1.57. Not a bad candle. Not a bad candle at all. The daily candle, let me just look at this. Daily candle is off the highs of the day, but it's in leg C. I believe it should go to a D, and I think it might just touch 319.35 to make another leg up, which will be either D or F, depends on which one you want to take. And then we've got to be real careful. Everything's just panning out, and we'll have to see if it really works, because this is such an important day today. And I'll explain now. I can explain. No, I can't. I've got to go to the GC. Gold is acting okay. It's up $1.90 at 12.19. It hasn't broken out, but it hasn't broken down. So I'm looking at it and I'm saying some gold stocks are starting to act very well. On the next big pullback in the dollar, which is close, it's in leg C. I'm expecting it gets to at least in leg D. I was asked about the USD JPY currency pair, and all I can say is that the currency USD JPY currency pair is acting okay, but it's not great, and it looks to me like it's going to fail. And I'm watching it real closely. If it fails first, it's saying the dollar could be next, because so far it's kind of gone up with the dollar. It's gone up with the market, EUR, USD, and the euro-dollar currency pair is on its way down. But look at that. When I talk about the stochastic being absolutely magnificent, when it's up in the 95% area, it is the exact opposite when it's at 4.72. That is the euro. And it says that the euro has to have at least one big spike to the upside, and then it has to come back and test as the stochastic slowly makes its way into the teens from the single digits. Terrible, terrible looking chart. All right, I think I want to go to Mark in Denver. Is it Denver? Hi, Mark. How are you?
Good. How are you doing?
Where's Denver?
Denver.
I thought there was something missing over there. I've never seen a Denver. You wanted to look at?
Dry ships.
Okay, me too. I also want to look at dry ships. We'll be back with Mark in Denver looking at dry ships, DRYS, and Garo in Newport Beach straight after this break. How's at 300.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back on this 8th day of January, and we are on with Mark in Denver. Oh, no, that's Denver. Dries, we're looking at dry ships. It's a dry bulk carrier. And, in fact, what's really interesting is we've had my opening call a couple of times, but most importantly, I've left it off for 4 or 5 days, I think. I did not want to get it because it didn't show the kind of signs of strength that I wanted to see. It's just been hanging around here. And my absolute favorite, I remember hearing this guy, Nordic American Tanker Shipping, for years with being interviewed by Kramer. And he kept saying, we are buying, and we 35 or 55 or 105 years, we haven't not given a dividend every quarter. Just an amazing thing. They give the dividends. Well, if you got a dividend and you bought the darn thing at 35 and you kept listening to him and you watched it go down to 6.87, yeah, you'd have a fantastic dividend, but you would have lost a little bit of money from $30, $35 down to $6 or $7. So now it's at 1160. NAT, and it's starting to show really good signs. And now I believe everything that he said. It's the best. I haven't looked at all of them, but it seems to me to be one of the better ones in the group. I keep missing getting it. It was on my list. In fact, we almost got it, and you can see this move over here. It never pulled back, and when it did pull back, it was hugging that 9-period moving average, and I watched it. and I watched it, and I think I chose DRYS instead of NAT. And look, it broke out from 10 to 11, and I think it's a much stronger one. So now I'm trying to say to you, and this is a kind of a backward way of saying in this market right now, and what I discussed when I gave a talk recently, I said there could be a higher level consolidation going on at this point. If we break 7,600 and the 17,600 in the Dow, I'm kind of nervous. And watch that VIX index. Well, the VIX did its job, the market did its job, and now it's trying to come back. And what's happened in this move up, if you don't mind, this is answering your dry ships question, but I want to do it in a roundabout way because I want to show what's going on here. It's a good opportunity. Look, GE, my Dow Quartet, it is horrible. 24.22, up 14 cents. IBM, it is horrible. It's up 3 at 158, but the weekly chart looks just terrible. Triple M, one of my absolute favorites, although we don't own it, acting pretty well, but it's not at the all-time high. It looks like it's going to go to the all-time high to go to leg D at 168.16. And UTX, like GE, a pilot light, but a more intermediate-term pilot light, is acting okay, but UTX is way down. It went from 118 down to 110. So it's got quite a lot of work to do to make the double top. It should do that. So you've seen a rotation out of some of the recent big winners into a whole new bunch of a new selection. The SMHs not doing that great, doing okay today, but really doing okay. That's all I can say. So now let's go back to this, and I want you to point it out. Why? Because if dry ships is not doing well, I know it's $1.04, and I know that something like NAT, buying it at the recovery high here, almost like a 1.5 year high, would be crazy. But the leaders are going to continue leading. That's the point I wanted to make. So now I'm going to ask you, do you have any dry ships at this particular time?
Yeah, I watched it come back into that fairly big volume day. I think it was 27 million shares when it was on its way up. I think it was, let's see, what day was that? That was the 22nd of December.
Yes.
And it came back and tested that day several times on lighter volume to the downside. And so I picked it up at around 101, 102. And I've got half a position in it. And,
exactly what you're talking about is the only way that I would have wanted to do something like this. I would have started the position. I had using a phantom peak. I had a peak D right at that high that was made at 136. Folks, we're looking at DRYS, dry ships, and then it pulls back. It pulled back. In percentage terms, it's a big percentage from a 136 level down to the most recent low of 1. That's 36. That's 30%. That's a move. So, but you got to expect that with a very low price stock. So you're getting into it, looking for the bigger moves, and you might have to take a couple of little hits that turn out to be big percentage moves. But if you keep it small, I would rather increase my position as it confirms the move high. And how would it do that? If it takes out 1.15, which is the high, back on the second, then it can hit 118, the 200 period moving average. Actually, we'll finish this up. Can you hold on?
Yep.
Okay, we'll finish this up, and if Garo can wait, Garo, I do want to look at Apple, so we'll be back with both Mark and Garo straight after this brief message.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back, and we're back with Mark in Denver. And I just wanted to show you, looking at this 120-minute chart of DRYS, DRYS, trading at $1.04, you'll see that 200-period exponential moving average has just been tremendous for support, then resistance, then support, and now resistance. What you really want to see, and this is what my concern here, is that if you've got a leader like NAT moving like it is, then this should be doing something. So because it isn't, the fact that it's $1.04 means that, yeah, you can buy a chunk out of this, and if it moves up 30 cents, you've made 30%. But also if it pulls back to the 95 area to find support again, that's a big problem. So I'm going to suggest you stay with us. I would actually increase my position only if it closes above 108. And it does that for about an hour and a half, starts to make 106 a support level, and then has one sudden pop to like 111, 112. I say, hey, that's better. That's the action I'm looking for. But of course, I do want to see it break 1.16 is really what you want to see. Boy, better do that by tomorrow, because if it doesn't use this momentum right now, I'm not sure what it's going to take. I also don't see it dropping very much, but that could be dead money if you're just sitting there. So, Mark, my suggestion is stay light. Let it start moving. Let it show you that it got strength. It might move so quickly you can't actually get that second position on. That's a pleasure. Rather than have it pull back and to try to get out, let it move higher. I'd be a bit patient with it. And I would only add, and then the second position that I add, I would have a fairly tight stop on that because I don't want to take a nice setup and turn it into a mistake that I'm married to because it suddenly drops to 99, and it has that potential. So I hope that helps you.
Yeah, would you put like a 10% stop on that 101?
No, 10% I would not. I would say that if by intraday, if it starts to get to 99, I'm saying, hey. I'd rather get on the bandwagon as you're moving higher. I don't, because from 99 to 95 could just happen in a split second.
Okay.
So be careful.
Okay, thank you.
So thank you very much for calling. Good eye, but today is the day that it needed to move. So let's go on to Garo in Newport Beach. Garo, thanks for waiting. You're looking at?
Yes, sir. Thank you for taking my call. I'm looking for Apple to short it at $113. I needed your opinion and idea.
Okay. Now, I'm actually a little surprised that you didn't tell me that you grabbed it as a long position and that you would be shorting it if it gets to a certain point. What? Can you tell me why did you not go long?
Because in this past 1 week, I was very busy with shorting the oil. I was concentrating on that. Okay. So I can concentrate only on one section.
Yeah, no, that's fine. I normally this kind of move is the move that I know that you would like to play the long side. That's the only reason I asked. So, okay,
yes,
this is what I'm going to suggest. Apple is not, I think Apple has a little problem here, but that doesn't mean to say that it from 110, it shouldn't be a big deal to go up 10%. It's done it before very quickly. So I'm going to be watching Apple very closely. Why? Because in this rotation that I'm talking about yesterday, I went through Amazon. Amazon is only up 2 at 301. Priceline, it was down before. It's down again. It's down 4. The big guys are not doing very well, and that's why we've got this sudden rotation into areas that some fund managers were very light. I think they're going to start building positions in some of the areas that are working right now. So Google, also same thing, down 96 cents. So you've got the one stock, not the one, but one of the few of those 5 or 6 big leading NASDAQ stocks that's actually bouncing nicely today. It's up 2.9%. So this is what I'm looking at. Oh, you have got your eye on it. You don't have a position in it. I think you're absolutely right about it being a short. I'm a little hesitant right now in this particular market environment to do anything other than what you normally do, which is to short and within hours take your profits as it's working. So this is what I'm looking at. Apple has a lot of resistance in the 120-minute chart at the 112.23 level. In the 30-minute chart, it's in leg A, B, C, D. I believe that's C. No, just as what I did there. This is leg C. So the way I'm looking at it, Apple has a chance to get towards the 112 to 113 level. If it does it really quickly, I would say that's momentum that I wouldn't want to short just yet. But if it kind of struggles and eventually over the next, by Monday only, or Tuesday, it actually gets towards that 112, 113 area, that's something else. Now, you've got 115 between the high, this last arch high was 114.77. So right. I'm in agreement with you, except for one thing. Having made a lower low than that left side low of the 16th of December, making a higher high says that you've got what I would call an engulfing candle, even though it's made up of many, many candles. If you were looking at it, say, as a monthly or a weekly chart and take just one bar that went up and down and another bar that went from the low to possibly a new high, a recovery high above 114.77. So then I would say to myself, okay, now what am I looking at? The MACD, the stochastic, what's failing? And therefore, I'm going to say to you, have a little patience. Unless I'm wrong, we should get some kind of a doji candle tomorrow, or maybe just a slightly down candle. And then Monday could be a strong session. That's what I'm looking for. Whether it pans out or not, I just don't know. Apple right now has moved up the last 2 days, just as the market has. Not quite as strongly, but has moved pretty nicely. My overall view of the weekly and the monthly chart says that the monthly chart is giving clues, but not a signal yet to say that it has made a double top at that 119.75 level. That double top, I call the G. If it goes to 119.76, I'm going to have to rename that. And the way I'm going to have to rename that is to say it's ABC. That's leg D. So here's my suggestion. Apple still has a lot of followers in the fund area. Therefore, based on that, I'd be hesitant to short Apple after the move that it's just had down. And I agree with you. Going up and then failing would be the pattern I'm looking at. So give it a moment. What's today? Thursday. Let's look at it together, maybe by Monday, and see if it's ready for shorting. But at this particular point, I would say that going with the market trend and as the better of the 5 or 6 top heavy-duty, big capitalized NASDAQ stocks, Apple's the one that is rallying. So I would say that until it shows signs of failing, I don't think I want to be in the short position in Apple. And that's it. I'm going to leave it just at that. But once it gets to a certain point, I'll do an assessment because the weekly chart, unlike the monthly, the weekly chart is suggesting there's internal weakness in Apple. And that's going to show itself in the next 2 weeks. So I'm kind of in agreement with you. Just think it's a little bit early now to short as a new short. If you had shorted before, that's different. Hope that helps you.
Yes, sir. I'll call you on Monday. I wait until then, and I call you on Monday, and we'll
Thank you very much, Garo. Looking forward to that. Thank you very much. Let's go to Travis in St. Louis. Travis, how are you?
Just fine. Good morning to you.
So let's look at this. I actually had it on my list, and I turned it. I had it in my, you know what? I put it in my book that I write everything down, and I forgot to extend it because I said I'd be watching it, and I put it on, and then I forgot. I've got it down now. So CLVS is what you want to look at, right?
Yeah, one of my old favorites here.
Well, you've had some really nice, you've thought it through very well. The last entry point you had was the one that we said, this is the one that's going to be the most difficult because it is underneath the previous peak and the MACD was coming down. The stochastic was below 80%, and that big move to a leg C and sharp pullback. Folks, we're looking at Clovis Oncology, CLVS, trading at 58, down 20 cents today. But, 59.20, 59.20. It's in leg D in the daily, and it is in leg, it's made a peak C in the weekly. Now, what I want to do is to show this. So you still have your positions. I can't remember if you were going to add to it or you had kept it still in that one position.
No, I'm all in on this thing. I bought a couple of times over the last 45 days or so, 30 days, or however long it's been. And I'm just a little bit, we started talking, the first 5 days of the year, what a move in the broad market. If that's any indication of the whole year, we're in for quite a wild ride in 2015. But this thing's held up really well. And I'm just kind of thinking, do we think the broad market may hit some sort of intermediate high in January, and maybe I should exit most of my position and see if we get like a double-digit decline in the S&P and the Dow, and then maybe try to add this thing back? Because the likelihood of it holding up through that kind of a correction is probably pretty slim, wouldn't you say?
Yes. Now, okay, let's talk two things here. One is I'm doing a left side, right side. I'm actually going to take our love gaps because they give me nice entry points to do a trend line. So I've got, based on my daily chart, January the 16th as the attempt to get to the high, most recent high of 62.20. So that's 5 points away. That's a lot of work to do in quite a short time. It's about a week, right? Yeah, it's less than a week. Right. Now, if that's the case, and I must make this a dashed line, single dashed, and make it a different color, make it pink. And the way it's acting, and since I've got this in leg D at this particular point, it's saying either it's going to recycle or something's going to have to happen, because the move that it made from the high that on the 19th of December at 58.71 to this modest high that it's just made of 59.20, it's taken quite a while to do that. It has, in a sense, ignored the market move down. It had a little bit of a decline, but actually it held very well, which tells you that in the biotech area, the rotation into the lower or the lesser known names has been going on, and is still going on. I mean, look at an ISIS, which is not now it's becoming recognized, but it wasn't one of your major stocks, and it's tracking 70.39 at an all-time high at this particular point, and it's only just become kind of one of the more popular names. And I don't know if it's in the IBB. I'm not sure if Clovis is either, but this is made up of the very big cap stocks. So the IBB is struggling right now. It had a great move up early morning, pre-opening. It was up in the 319 area. Now the IBB is at 313. So now we're looking at the possibility that in January the biotechs have their final hurrah. And for this period, and then they take a good timeout. A timeout meaning 6 to 8 weeks. It could even be months. I don't know. That's just kind of the way I'm looking at it. So your stock, in a way, has been independent of that. But it will absolutely be, I'm pretty sure that it will be impacted if the IBB starts to take a move down. Now let's look at the weekly chart. The weekly chart is different. The weekly chart shows that in the U-shaped pattern from its high back in June, I think it was. Yeah, June, the week of the 7th of June of 2013, had a round number low 50. It had an open of 50 at a high of 86.29. It comes all the way down to a low of 43.86 in November, goes back, makes a cup formation, goes to a peak G/C the week of the 7th of March of 2014 at 93.33. And boy, this thing takes a dive. What does it do? It goes to the 200 period moving average. Folks, this is just I wanted to show it earlier with Garo in the Apple chart, but we'll just deal with this, what we've got. So it treats this as a beautiful basing area, the 200 period moving average, and then it takes off. It goes to peak A, B, peaks. Now, I could have called this peak C1, C2. I'm inclined to do that for only one reason. Within this, we could be getting an A to a B, and there may be a breakout. And what it's showing you is that the move above 62.20 should be quite a strong move, because the stochastic's at 74%, but it's building strength to try to get to 80. But the MACD has just been like a rock, steady as a rock, moving higher, the fast-moving average, the green line. So I'm just a little concerned that if it doesn't build that power in the next, I'd say 3 to 4 sessions, but instead it starts to close under the 9 EMA in the weekly, under 54, let's call it 54, because 54.80 is the number. You can see, if you're looking at this pattern, in time and in price, we should be at 66 to somewhere 66 to 70 based on this pattern, and it's not done that. So that's the one thing that when I looked at it, when we spoke last time, I said how quickly we can break into the 62.20s is going to be really important, because that starts leg D. I think you got your nail on the pulse there. I think you've got it right. You're in leg D. I would, in some part of my position, I'd have a stop at about, I'd watch it closely at about 56.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We're back, and I just wanted to finish with Travis. You still there?
Yes, I'm here.
Okay, I didn't want to spend so much time working through this and getting such beautiful trades. I just want to say that I don't want to be short-term about this and by saying if it goes to the 56, 55 area that you've got to take something off and you can put it back, because where would you put it back? You put it back a point or two low. And if you're in for the longer term, that means to me that the goal would be to see leg D above 62.20, and if it gets to 62.21, take a quarter position and use a trading stop, and that you'll just have as the position that you take off first. At some point, you might decide just to take it off. You might decide it's a trading stop, or you might have a goal. In this case, you could use, well, it's hard because you don't have a left side, a peak. You just have Yeah, it's very hard to say because once it breaks out, it could be clear sailing to the upside. That's the reason why I don't want to mess around in a position that you took so long to get. I just wanted to say my own personal feeling would be at this stage, I would probably want to lighten up just a little bit because it's showing a little bit of weakness in the daily chart. But because you're longer term, you might want to just try to hold all the way through January. So let's look at it again maybe next week. But so far, you're doing great. Thanks for calling.
Thanks, Basil.
Thank you. Let's go to Mike in Pennington. Mike, how are you?
Good, Basil. How are you doing?
I'm well, thank you. So you wanted to look at Amber, which is Umbrella Inc. It's trading at 58.40, down $1.60. Had a fabulous move, made a leg D, and it's making a peak D if it doesn't make a new high above round number 60 from yesterday. What are you doing?
Well, I'm long. I've been long since 55.
Oh, wonderful. Okay, so this is what I'm going to say to you. The stocks that are working right at this moment are the stocks that should continue working if the market continues higher and the Dow can get to a new all-time high in the next week or so. So I think that that's really, to me, Amber is doing what some of the NASDAQ stocks used to do, and they're just not doing anymore, those big cap stocks. So this is one of the leaders at all-time highs. Stock at all-time highs continues often to go to all-time highs. So I'm not going to interfere at all with it other than to say if there's a pullback in the next 3 days that takes out 54.34, be a little bit careful because the stochastic's only at 75%. I would have liked it to be at 80%. If it breaks out and goes, you want to see it go to 60.01 to get rid of that round number. But so far, I think you've got a very nice trade. Just wanted to quickly look at the 120-minute chart. Yeah, 120-minute chart, ABC. I think it's in leg C, and it should try to go above 60. Hey, nice trade. And in this particular market, you want the winners, and I think you've got one of the leaders here. Nice position, Mike.
Thank you.
Thank you. Thanks for calling. So, folks, just before we go to Larry Pitt's event, I wanted to mention I didn't have a chance because I had callers. So the TLT, this is really important. Is it making a peak E in the daily and a leg E, maybe a peak E in the weekly? It's gone to a new recovery high. It's gone in that cup formation, and that double top formation is one that I'm always very careful of. Now, if there was an overlapping wave, and this was leg D. This leg D in the monthly should already have spiraled into the 133, 135 area. TLT's at 129.72. I'm watching it real closely because if bonds pull back and the VIX pulls back, I think we have the ingredients that says money will go. Look at the bonds and look at the VIX, and it says they have the ingredients to allow this market at least to squeeze the shorts with new money coming in for January and try to make those higher highs in January. That's my thesis. Will it work out? We'll know soon enough. I'll be back later today with Tom O'Brien. Stay tuned for Larry. Should be a great show with Larry as always. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.